The Fed is creating inflation. It's trying to distract the markets by pretending it's going to get tough and fight inflation. But in the meantime, it is creating inflation. And I think the metals markets are going to start to appreciate this. But this was very bullish news because it does push those rate hikes further into the future if they ever occur at all. And I would be surprised if we ultimately get them. Again, I think we're setting up for cuts and a ramp up in QE.
We have to have a collapse of the bubble assets, basically, because the only way to get rid of the debt, and you can't just write off the debt, because if you write off the debt, of course, all the asset side of the balance sheet also implodes. And that's why we're going to have inflation first, very high inflation, and then we will have a deflationary period when all asset prices come down dramatically. By that, the debt disappears, and then we have to start again from a much, much lower level.
The debate over inflation and central bank policy is becoming increasingly important as economic uncertainty continues to grow. While many investors focus on official statements, others are paying closer attention to what policymakers are actually doing behind the scenes. Peter Schiff and Egon von Greyerz, both well-known advocates of sound money and precious metals, emphasize that inflation remains the defining force shaping today's financial landscape. They argue that central banks are creating inflation, while simultaneously attempting to convince markets that they are committed to fighting it. According to their analysis, the expansion of money supply and continued monetary intervention suggest that inflationary pressures are far from over. One of the key predictions presented is that interest rate hikes may never reach the levels many investors expect. Instead, economic weakness could eventually force policymakers to cut rates and restart large-scale monetary stimulus. They also believe precious metals are beginning to recognize this reality. Gold's recent strength is viewed as an early signal that investors are preparing for a future marked by currency debasement, persistent inflation, and declining confidence in central bank policies. The outlook remains strongly bullish for gold as these trends continue to unfold. Now, we present the clips from their interview. Before we continue to discuss this, please hit the like button, subscribe to the channel, and ring the bell icon. Thank you, and enjoy the video.
The Fed should have hiked rates at their last meeting, and 25 basis points isn't even enough. If Warsh were really serious, he would have already done something. He wouldn't have set up 5 task forces to basically bide him some time while he does nothing. Meanwhile, look at money supply growth is really accelerating. Look at M2. Look at the Fed's balance sheet. The Fed is creating inflation. It's trying to distract the markets by pretending it's going to get tough and fight inflation. But in the meantime, it is creating inflation. And I think the metals markets are going to start to appreciate this. In fact, gold, which did make a new low intra-week, it got below 4,000 again a couple of times. It had a nice rally today in response to the weak jobs market. We closed the week above 4,000, in fact, above 4,100, 4,118.50. So a nice turnaround, about an $88 rally in the price of gold. I really think 4,000 is the support. In fact, we may not trade below 4,000 again. We'll see. We traded below it a couple of times, but this was very bullish news because it does push those rate hikes further into the future if they ever occur at all. And I would be surprised if we ultimately get them. Again, I think we're setting up for cuts and a ramp up in QE. Silver, the same thing. It made new lows, but it closed back above 60. $1.74 gain on the day at $60.72. So I think we're going to see some continued strength in the metals as people start to appreciate the fact that the Fed is all talk, that they're not going to be able to walk the walk when it comes to inflation fighting because the economy is too fragile. The job market is fragile. The bond market, the housing market is a disaster just right before our eyes. And so the Fed is going to be under all sorts of political pressure, especially as we're coming closer to the midterm elections. Trump is trying to do what he can to control the damage. He's got this ceasefire from the MOU with Iran that really doesn't end the war. They're trying to bide some time. They're trying to get the oil price down by reopening the strait. But Oil prices are not going to stay down. As I said, right now we're back below $70, but they're not going to stay there. This is just some short-term noise, relief. The longs are getting out of the market, and I think that you're going to see a big bounce in oil prices as we move forward. You have record low inventories around the world. Strategic reserves have been run dry. I think Trump said that we were maybe 3 or 4 weeks away from being tapped out ourselves. So there's a lot of demand coming. Plus, there's going to be a risk premium built into the oil market. Nobody has any idea now what's going to happen. Even Trump keeps saying that, the bombs could be dropping at any minute. This MOU is really not real. We're just trying to keep oil prices down for a while, right? I mean, basically telling Iran not even to trust us, that we're not even serious. This is all politics. We're just trying to keep oil prices down for the summer driving season. So there's going to be all sorts of political pressure on the Fed not to hike rates and tremendous pressure to cut.
It's a good thing. We need these disorderly resets because it's not just financially and economically that the world is now totally mad. It's also the world has lost all values and we need to come back to real values. That's why now we're living in a dream world. It's a bit of Shangri-La. I think it'd be good to have a proper reset. A lot of people will suffer in the meantime, but the world so far has gone on for many thousands of years or millions, or human beings have been around for 1 million years at least. And, I think that will continue for quite a long time still. But, we have to have these shocks in between. Times have been too good for too many, for too long, and especially for the wealthy in the Western world, whilst a lot of people are suffering now already.
Financial markets are entering a period where traditional policy tools may no longer produce the desired results. Rising debt levels and slowing economic growth are making it increasingly difficult for central banks to maintain stability without creating new problems. The current environment suggests that inflation is being fueled by monetary expansion rather than temporary external factors. While policymakers continue discussing inflation control, money supply growth and expanding central bank balance sheets tell a different story. This disconnect is becoming more visible across financial markets. As economic growth weakens, the pressure to support markets through easier monetary policy is expected to increase. The forecast presented here points toward a future in which rate cuts and renewed quantitative easing become more likely than aggressive tightening. Precious metals are expected to benefit from that shift as investors seek protection from declining purchasing power and ongoing currency dilution. Gold's ability to hold key support levels is viewed as a constructive sign, reinforcing expectations for higher prices as inflationary pressures persist. Now, let's get back to the interview.
No monetary system has ever survived in history. So therefore, if governments point that out, of course, that's the end of their reign. Is this a systematic, intentional policy? I don't think initially that it was. Maybe now they are trying. Of course, they're trying to control it all the time, but they don't succeed. The simple reason is that, empires are built from a few initial victories and then creating wealth and then invading other countries and stealing from them. Then you reach a peak. And once you reach that peak, it's only one way down, as I said. And at that point, since the money is not sufficient to maintain that level of prosperity that has been built up for a number of years in an empire or in a country, then there is only one solution: to print money. And that's what every single government has done throughout history. You take an example of Roman times. They didn't actually print money directly, but indirectly they did. If you take the Roman denarius, which was a silver coin, the value or the silver content, if you take between 180 and 280 AD, the silver content went from almost 100% to almost 0% in that coin. So they replaced it by copper and zinc, etc. And that was a way of printing money then. So there has always been a system for robbing the people of its wealth by governments, by destroying their money. And that's going to continue. And now, of course, digital money is going to make it so much easier. You just press a button and add a few zeros and that's it. So it's going to continue, but it will always lead to a collapse. We will never have an orderly reset, in my view. of this system. It doesn't work because the only orderly reset would be to cut all the expenses of governments by 50% or more, which would include, of course, defense, social security, medical expenses, etc. And no government will ever do that because they won't be re-elected then. And no opposition party could ever promise to do that either because they wouldn't be elected. So the system in itself is, you need a dictator, basically, that tells the people, now we're going to cut the standard of living to half, and you're not going to have any contributions of any kind, and you've got to look after yourself. And of course, in this socialistic period of history that we're living now, nobody would know how to do that. Nobody's now used to looking after himself. Certainly not in the Western world. And therefore, it will be, people expect all of these things now. We have to have a collapse of the bubble assets, basically, because the only way to get rid of the debt, and you can't just write off the debt, because if you write off the debt, of course, all the asset side of the balance sheet also implodes. You have to get rid of the debt, and therefore it means that people will be a lot poorer for a while until you start again. It's not going to happen in an orderly way. And that's why we're going to have inflation first, very high inflation, and then we will have a deflationary period when all asset prices come down dramatically. By that, the debt disappears. And then we have to start again from a much, much lower level.
So you got to keep that in mind with the 4th of July. Yes, we want to celebrate American independence, but we also want to mourn what we've lost. And we don't want to pretend that the nation we have today is anything remotely like the nation that our founders fought and died to create for us. That the posterity is not honoring the sacrifices that were made because we are not continuing the traditions. I want to go back to that. I'd love to have a political revolution in this country that can overturn this through the election process, if that's ever going to be possible. But we have to keep striving for that, because at least if we don't strive for it, we'll never attain it. But anyway, I just want to, again, wish everybody a healthy and happy 4th. This is the real Independence Day. Don't let someone tell you that it's Juneteenth. It is July 4th, 250 years. We did create the most prosperous country in the history of the world because we honored those traditions for 150 years. We really started going in the wrong direction with the populist movement towards the end of the 19th century, early in the 20th century. But ever since the New Deal in the 1930s, the Great Society in the 1960s, and then what's going on now, we are moving further and further away from the republic that we created. Not in 1776. That's when we declared our independence. We didn't ratify the Constitution until 1789. But that republic exists in name only. It is no longer the nation that we created. So we have to strive to try to recreate it and try to keep that perspective in mind as we're collectively celebrating Independence Day.
Beneath the daily market headlines, a much larger adjustment may be taking place across the global financial system. Investors often focus on individual economic reports, but the broader trend revolves around debt, monetary expansion, and confidence in fiat currencies. The argument presented is that the current system has become heavily dependent on continuous liquidity injections. Governments require low borrowing costs, financial markets depend on easy money, and central banks are increasingly constrained in their ability to normalize policy. Attempts to aggressively fight inflation could expose weaknesses throughout the economy, while continued monetary expansion risks undermining confidence in the currency itself. This creates a scenario in which policymakers may ultimately choose inflation over deflation. Rather than allowing debt burdens to be liquidated through a painful contraction, authorities could continue expanding money supply to support governments and financial markets. One prediction is that future economic weakness will force a return to quantitative easing and lower interest rates despite persistent inflation concerns. Another expectation is that precious metals will continue gaining strength as investors recognize the long-term consequences of these policies. Gold's ability to remain resilient near important support levels reinforces the view that a larger bullish trend may already be underway. with inflation and monetary stimulus acting as powerful catalysts in the years ahead. Share your thoughts about this interview in the comment section below. If you found this video helpful, please hit the like button, subscribe to the channel, and ring the bell icon. Thanks for watching.